We'll go to chapter 2, use of technology in accounting. Now, when you talk about the use of technology, it's basically the use of software, different accounting software by businesses to carry out their financial transactions. Not only to carry out their financial transactions, also to record their financial transactions. That's why they use technology. So we start now with introduction. So introduction to technology. Yeah, so today computers are very widely used to operate accounting systems. Sophisticated technology is now available at a reasonable cost. Large to medium-sized businesses are used special within IT software for many years, working with IT companies such as Adobe and Sage to tailor IT software to their individual needs. Most large companies also have IT departments who monitor their financial systems 24 hours. Until recently, most smaller enterprises did not set up their own systems because of the cost of such software. Now, however, even small businesses can afford to use computerized systems with off-the-shelf package. I'm going to explain what off-the-shelf package is anyway, such as Sage or QuickBooks. These packages carry out the same double entry functions of data processing and recording financial information as manual systems and also offer other features such as management information. So what we're trying to say here is that these days, before now, it's difficult, it's so expensive for small businesses to start to use accounting software because of the initial cost of it. But these days, it becomes easier by the use of off-the-shelf package. So here I wrote this introduction to accounting, to technology in accounting. This implies to the use of different accounting softwares for accounting records by businesses. Small shops do use off-the-shelf packages such as Sage or QuickBooks. So when I talk about off-the-shelf package, it's any software solution which is usually developed for commercial purpose. There are different software that small businesses can use for large customers. So we call them off-the-shelf. That means as soon as it is always ready to be used. That's why I call it off-the-shelf. As soon as it is, you are buying it, as soon as you are buying it, it is ready to be used. And it is easily accessible for all businesses. And customers can use it. You can use it. It's a mass market. And when you talk about mass market where you can have large numbers of customers. So they use this kind of accounting software and it's not expensive. So that's about off-the-shelf software. So now we have to talk about what facilitates technology in accounting. So the first one I wrote here is internet access. So when I talk about internet access, here I wrote, it enables the use of technology to advertise, pay employees, pay suppliers, and also allow customers to deal directly with businesses. So with internet accessibility, it means you can use technology to pay your customers. You can use accounting software to pay your customers. You can use accounting software to pay your employees. You can use accounting software to receive payment even from your customers. Do you understand? So it's not always like you paying physically, that you need to be there, or your customers have to be with you before they make payments. It can be done online, in as much as there's internet accessibility. Do you get the internet access here? The second one, computer hardware and software. So when we talk about hardware, we're talking about the features of a computer. Here they said the physical aspect of the computer, the keyboard, the mouse, the monitor, the screen, these are physical aspect of it. Then we have the software. For the software, what are the computer software? Those are the data, the information that you input to carry out the function by the hardware. So the hardware carries out the function, but you have to input this information, you have to input this data, you have to put in this data before the hardware can process them to do what you want them to do. So that's the difference between the computer hardware and software. I think it's clear. So without computer hardware and software, without internet accessibility, we cannot use technology in accounting. That's what we're talking about here. So to facilitate technology in accounting, we need internet accessibility, we need the computer hardware, we need the computer software. Any question about that?
No.
Good. So we'll go to functions of accounting software. Page, go scroll down. Sorry, go down.
13.
Is it 13? Is it 13 place? Yeah. You scroll down. Yeah.
Online bank accounts and apps.
No, not online. Functions of accounting software. 2.2. Can you find that? 2.2. Computer hardware and software. Okay, can you find that now? All right, so for functions of accounting software, yeah, I wrote. A computerized accounting system offers similar functions as a manual system. However, it also provides useful reports and management information. The system is integrated. So basic data that is entered is processed and automatically processed to supplier and customers' accounts. So from here up to here, what they're trying to tell us is that computerized accounting system also functions the same way as you do your manual recording. Like you record your information via the notebook or your ledger that you prepare for your business. But here it becomes computerized, which means you have put different information on the system. So you have integrated them to perform the same function that you used to do manually. So what is the advantage about this? It becomes easier and quicker. So instead of you recording ledger and for each customer, recording ledger for each suppliers differently, you can just get it done once because everything has been integrated.
Yes.
Okay. So the nominal ledger and the inventory records are also automatically updated. So because it is integrated, so whenever you only need to post once and everything will be generated. Just post the individual customer or the individual supplier. It will definitely go to the ledger account for that customer or the ledger account for that supplier. Is it clear?
Yes.
So accounting software allows financial, the second paragraph now. Can you read the second paragraph, please? Accounting software. The second paragraph.
Accounting.
Software. The second paragraph. The first paragraph ends with below. No, scroll up. Let's see. No, scroll up.
This is 2.3.
I'm still talking about 2.2.
Where's 2.2?
Good. Oh, okay. Now, this is the first paragraph. The second paragraph. Read it, please.
Accounting software allows financial statements to be produced more quickly than traditional handwritten methods. The use of pre-programmed formula and layouts means that financial data only needs to be entered once. The software can then make various uses of this information and can store it in different ways. The software can use data provided to complete all aspects of a transaction,
yeah. Such as generating documentation.
Documents.
Thank you. So we're still talking about the function of computer accounting software. Now, we don't have to start recording separately. It becomes more quicker because everything is automatically generated. So you only have to input it once, then it will generate all the information needed to individual accounts. So they said the use of pre-programmed formula and layout means that financial data only needs to be entered just once. You enter it once and it automatically goes to where it has to go to. So what happens afterwards? It doesn't end there when you enter the transaction or when you enter the information. It will process it and put it to individual accounts. And after that, it will also generate whatever information that needs to be generated from each individual. That is what accounting software is about. Is it clear?
Yes.
So we'll go down, please. So how do we use accounting software for different, so functions of accounting software? The use of technology, I wrote here, the use of technology with different items of the financial statements. So we start with the revenue. You know what revenue is? The amount of money you make through the sales of your product or through the services you render. So how do you use accounting software here? Here, this involves preparation of printing of revenue invoices, credit notes, and month-end statements. Data from these documents is entered, processed, and recorded in the customer account in the civil ledger by automatic update of the inventory record. So for revenue, here, what do you need revenue for? How do you use accounting technology in accounting? for revenue. So we already know what revenue is. The return, your sales, the sales, what you sold, what comes in when you sell a product, okay? So what happens when you can record it automatically in an accounting system? How do you record it? You have the details of the invoice that you use in selling to your customers. You have the invoice with you. So what do? You input the invoice. When you input the invoice, it gathers the information. So it records it into what? The trade receivable account, because your customers would have trade receivable because they didn't pay for the payment. They didn't make payment. They bought on credit. As a result of that, you input it and it generates the information needed on ABC Limited. ABC has bought from us on credit because we have the invoice. We record the invoice and it automatically makes a ledger for ABC. That is what we're saying there. So as soon as that is done, it also automatically updates your inventory because you have sold. Your inventory is already integrated in the system. You already have it in the system. So if you have sold 100 bottles, it automatically reduces 100 bottles from your inventory. So your inventory is automatically updated. As soon as you update the inventory, as soon as you update your trade receivables, your inventory will also go down. Do you understand? That is the function of accounting for revenue. So that means you have sold, then your revenue, your inventory should come down. Yes or no?
Yes.
So as soon as you are selling, you are receiving cash or whatever. You are receiving cash or trade receivables. So your trade receivable is also an asset to your business, a current asset. So immediately your asset of stocks reduces as your asset of trade receivables increase. For purchases, what happens? You bought goods on credit. You bought from your suppliers. So as soon as you're buying from your suppliers, the system will automatically increase your inventory and at the same time increase your trade payables. Do you get it?
Yes.
Because that means it's not going to be only one supplier you have different suppliers that you do buy on credit from. So as soon as you purchase, your inventory will be updated, will increase, and at the same time, your trade payable ledger account will also what? Increase. Thank you. Yes. So that is about purchases. Those online bank accounts and apps. So for banks too, you have definitely a business would have its bank account, yes or no? So the banks you use, they would also have different bank facilities for you as a business. So you can make your payments online, your customers can pay online, you can make payments to your suppliers online, your customers can pay to you in your account online. And there are different accounting packages or facilities that your business could render online. So yeah, I wrote accounting system record data such as customer receipts, suppliers payments, other payments and receipts. Banks do offer online bank facilities, which means that the company account is always up to date. So because your bank would offer you different online banking activity or banking facility, it means your account will always be updated. Because as soon as money comes into your account, they update it. As soon as you make payments from your account, they update it by you receiving a credit or debit alert. So your account system is always what? Updated. Is it clear?
Yes.
So we go on. So another function is through wages and salary. Are you there? So for wages and salary, companies use payroll package for their employees. When you talk about payroll, I wrote here, they allow firms to organize their staff wages and income tax. What do you use payroll package for? Payroll means a system that is there for you to use to pay your workers and to deduct their income tax. That is what a payroll package is. So banks would offer you such system. Do you get it? It's your bank. They can offer you. And also you as a business, you can have a payroll software package, which whenever you input the salary of your workers, it automatically generates the tax they have to pay. That is what payroll package is about. Is it clear?
Yes.
Great. Then we go to inventory control. For inventory control, I already talked about inventory destock. So inventory records are automatically updated after each revenue invoice or purchase invoice is entered into the system. So as soon as you purchase, when you purchase from your suppliers, you receive an invoice, right? So the invoice will be imputed into the system. it automatically updates, increase your inventory. And when your customers buy from you, you give them, you issue an invoice for receivables. So as soon as you input it, it automatically reduces your inventory. That is what accounting in function is about this. Is it clear?
Yes.
The next one, management reports. Management also needs accounting records. They need accounting information. The managers or the owners of the business. So what do? So here I wrote, this implies to the provision of useful financial information about the business to owners and or managers of the business. So they need financial information, and they can also always get this through the accounting system. So what would they be able to do with the accounting system? Number one, okay, yeah, I said computerized accounting system helps to provide the following information. Number one, day books for customers and suppliers. We're talking about purchases day books or sales day book. Whenever you make record, whenever you buy on credit, you need to open a purchases journal. And whenever you sell on credit, you need to open sales journal. This is what we call purchases day book or sales day book. So instead of manually opening it, you open it through the system. Is it clear?
Yes.
2, general ledger and bank account transactions. So you make bank transactions. Maybe you receive checks or you pay checks out. You can automatically put it in the system. Is it clear?
Yes.
The third one, activity report on all ledgers. So you get detailed information about your suppliers, you get detailed information about your customers that haven't paid. Is it clear? An audit trail. So when I talk about audit trail, here I wrote, this is a step-by-step record by which accounting, trade details, and other financial data can be traced to their source. When I talk about audit means you want to check. You are checking the accuracy of all information that has been given to you as a business. So how do you check it? You check it through the source. Oh, you bought this on credit. Where is the invoice? Oh, you paid for this. Where is the receipt? Because the receipt, the invoice are the source document. So whenever you check different accounting transactions to their source, you are doing what? An audit trail. Just what audit trail is here. You are checking the records, you are checking the trail, you are checking transactions through the source of that transaction. Is it clear?
Yes.
Analysis report for aged trade receivables and trade payables. When you talk about aged trade receivables and aged trade payables, we are talking about customers' records that are due to be paid, suppliers' records that are due for payments. You bought from your suppliers on credit. You would have told them that, oh, I will be paying in the next 10 days. So if 10 days has come, then it becomes an aged trade payables. If your customers tell you that they will be paying you in the next 15 days, at the end of that 15 days, it becomes aged trade receivables. Do you understand?
How?
Aged trade receivables means that these customers are due to pay your invoice.
Yes.
Aged trade payables means that you are due to pay those suppliers that you bought from on credit. So how do you get to know this? You get to know through accounting system. So the accounting system will pump up to tell you that, oh, Ms. Chadin, you're supposed to pay this amount this month. Because you already have it system, you already have it detailed on the calendar. So the calendar at that day, the calendar will pop up to tell you that, oh, you're supposed to pay this amount. So that amount that you're supposed to pay to your supplier becomes aged trade payables. That amount that your customer is supposed to pay to you becomes aged trade receivables. Is it clear? Is it clear, please?
Yes.
Okay. So we have financial statements, including trial balance, income statement, and statement of financial position. The system, instead of you recording this manually, you open your trial balance. That means all the activities that are in your ledger, you put them into a debit or credit entry to make them balance. And you check the accuracy of those ledger or those transactions. For statement of for your income statement, all the amount of money you've all your transactions in terms of you want to know the profit you've made, and you want to know the sales you've made, you want to know the revenue you've made, you want to know the purchases you've made, you get to know through your statement of your income statement. And if you want to know what you have in terms of assets, what you owe in terms of liabilities, or the capital that has been injected into the business, you get to know through your statement of financial position. All these things are accounting system, can be recorded in your accounting system using technology. Then the next one is ratio analysis. When we talk about ratio analysis, we're talking about the financial ratios, which is you want to know more about the liquidity, your current assets divided by your current liabilities, your asset test ratio, whatever accounting, whatever arithmetic accounting information you want to do, you can do it through the accounting system. Is it clear?
Yes.
And the last one, reports. When we talk about reports, your workers, your employees, you need to know details about them. Are they always present? Are they always absent? When last do they come to work? How many times were they absent? You get to know through accounting system.
A month or a day?
What?
You said how many times a day they're absent?
How many times? Yeah.
A day.
I said, I don't know how many times they are absent in a month. Yeah. How many days were they absent in a month? Okay, so you get to know through the staff attendance. So how do you get to know this? There's a time machine that that the staffs, put in when they come in and when they go out. So you get to check, in 30 days, Mr. Abdulatif didn't come in day 4, day 7, day 8, or maybe we have to deduct his or salary. Do you understand? So these are what we use accounting.
How much do they reduce from his salary?
No, it depends on what the contract is saying. It depends on the contract. But for me, I'm always present, okay? So do you have any question about it?
Yeah, you've never been absent?
No, I've never.
Never?
Never. Trust me.
Okay, for them,